Welcome to Trading Dreams TV, guys. Today we're going to talk about top 5 mistakes that beginners, the traders, make on trading platforms. I did write down some material since yesterday, as I wasn't able to do a video from last week or so. I've been so busy with other things. Okay, so let's talk about straight into it, right? Top 5 mistakes. Number 1, education. Not having enough education on trading strategies or execution of trades and stock market. A lot of people get the idea of making money quick. This is basically the wrong perception on trading market, right? Going into this saying, okay, so education, it doesn't mean that you go buy $100 course from someone selling on Instagram or online ebooks or anything, and then starting your own. It doesn't work this way. You gotta have a decent experience, or you gotta be attached to some sort of institute who's been doing, or some sort of mentor who's been doing it for his lifetime. That's how I have learned. That's the only way. You need to educate yourself. A financial degree or master's not gonna cut you. They will definitely land you a good job in investment bank, but you still can't be a trader. In order to be a professional trader, you need to go seek education out there. If you guys like a recommendation, I will recommend ITPM, run by Anton Creel, Reginald Hultra, and a couple of other guys, big dogs in there, to make money consistently on a trading platform over the course of 1 year, 2 year, 5 year, or for, right? If you want to get a job and then be a professional trader, then you need to be consistent with your profits on trades. That understanding, this is where the education comes in. You cannot go get that sort of education from a university or a college. The degree is not going to cut it. This is a different type of education. People who got degree in finance, they go work with investment banks. They don't sit as a hedge funder. They don't sit behind the other side of the screen in that role. Very simple. Professional traders do that sort of thing. So if you're trying to land yourself a job at investment bank or some sort of thing, or hedge funder, then you need to learn a professional trading and then make it lucrative. Most likely you won't end up, you will end up just working for yourself as a trader. Everyone who's out there trying to teach is not a master or a professional trader. This is very easy. I would call myself a professional trader, and then I start teaching. That's just, I just don't feel it right. It's just not right, because I don't have enough to teach people. You know, I can give guidelines, I can share my experience, that's all it is. But from my experience, that's what I'm sharing here. Education is important. I did not do it for 1 year, and then I was just throwing trades in the dark, you know. And then number 2 is listening to the brokers. Let me give you a bit of clarity on the brokers, right? Brokers, they send a newsletter out there and whatnot. They tell you what sort of stocks to buy, sell, a bunch of horse shit. Don't listen. Don't listen to what broker says to you. It's simple. And also, let me shed some light on here. If you buy shares with a broker, you lose. Brokers make money regardless. You go look at their net worth. Any sort of broker, any sort of platform you pick up, been in the trade for 10, 20 years, look at the net worth. They make money. The money you lose, they make. Basically what happens is, once you lose your share or stock, it gets bought by a broker, because of course they got a lot of money sitting in their hedge funding bank, right? They loan money from bank, they borrow money from bank, and the platform uses it, and then you utilize a bit part of it. You lose your trade, get bought by the broker in the middle, same money from the bank, and then it gets sold on the profit. That's where a broker makes money. You lose money. Broker never loses money. That your money goes to broker, the profit comes to broker. Very simple. Might be a bit tricky if you haven't done much research or much trading, or haven't done any sort of course or anything like that. That'd be hard to understand how it works, but that's how it works. So you got to be really careful choosing your broker. I'm going to throw some links down below in my video. You can have a look. Some of the brokers charging no fee, no brokerage fee. They're only charging interest on your whatever CFD funding they do to you. Overnight interest, right? You can hold your trades in there for days and months, but there will be no brokerage fee. A lot of platforms charge heavy fee. Right, number 3, starting with low capital. That's a killer. A lot of people will say, oh, start with $100, $1,000. No, it is impossible. You should start with as much as you can. First learn, educate yourself, go to the course, learn from the professionals, strategies. Don't pick up on the pictures from Instagram or social media that some post, oh, these are the strategies that work. No, just don't do it. That will just get your money down the drain. Low capital is a killer. You start with $1,000, you'll lose it down the line in a week. You need as much as capital. I would say 20,000-30,000 is good enough to start, and then you only utilize 5% of it in trades if you're trading on CFD, and the rest of that keep it in the backhand for the fluctuations, for the margin. I'm not explaining what margin is here. You just need to go look. Hopefully you have done, if you're watching this video, you have done enough research and you have done a bit of trades and then demo accounts and things, so you understand what margin call is. So you need that money for margin. Only whatever amount you got in your bank or in your trading account, only trade 5%. The rest is for fluctuation. When you're doing and risk, number 4 is risk analyzers. So when that's where it comes to. That's where you lose money. Every platform has that little calculator there. You can analyze the risk and then how much the share goes down and then the fluctuation. It's a contract for difference, by the way. That's what we're talking. We're not talking one-on-one. One-on-one, what happens if you buy a share for $20,000 and then they go down on 18,000. You sell them, you get your 18,000 back. Or if the $20,000 share goes up to 25,000, you sell them at 25, you get 5,000 profit. This is what one-on-one trading. That's when you invest in stock market, right? That's for longer runs usually. But what I'm talking CFD. You need to analyze the risk. What happens is CFD is contract for difference. They lend you money. Personally, you don't need to go. If you got 20,000, that will get you up to trading $2 million. How cool is that? But there's a lot of it doesn't benefit to individual. There's a lot of cons, very few pros, a lot of cons. So when you say do you get the 20,000, do you basically get a buying power, and then you can punch bigger numbers in the stock market, but so does the risk. That's where you need to analyze. If you're buying something for $20, if it goes down to 10, you need to have enough money in the margin in the backhand to save that. Otherwise, the trade is automatically going to close. You will lose whatever the buying money you bought for and whatever the money you had. So your account is going to come to zero. It happened to me, not recently, but the past years. It happened to me when I was started stock trading, and then I thought I knew everything, but I didn't know shit. That's just from personal experience, I'm telling you. It looks very glorified industry from the outside, that you can make a lot of money, but it's just not. You need to analyze the risks. Every single trade you punch in or you push in for buy or sell, you need to analyze. All right, number 5, trying to make quick money. That's the big one. If you in the market, you think, okay, I'm gonna make quick money. Don't jump into it. That's not for you, because you're gonna lose money. Very simple. Saying this, consistency, if you're looking for that, or if you want to be a professional trader, you are on the right spot. But there's a lot of hard work. You need to set some sort of expectations. When you say in regards of, like, you say I want to make 500 a day, and that's it. You put a full stop right there. Don't get greedy trying to make 10,000 a day or trying to raise shit ton of capital. It's not going to work. Obviously, if you say you set your goal on 400 a day, and then the market, the funny thing is, the commodity market is open 23 hours a day for 5 days. So you can literally sit 23 hours on the computer and trade. But what it does is your brain gets exhausted over the time. I have done it. I've done some big trades throughout the day. I've been trading 18, 19 hours since it's lockdown. But I just figured out I stopped it, because you do good for 17 hours, but your brain gets exhausted. You push a wrong trade, you lose the money you made throughout fucking those 17 hours. That's insane. So at the moment, I got my budget set up, and I'm only trading 3-4 hours, some days 2 hours a day, and then I make the money, and then you out. And I'm slow. You got to slowly build that capital, rather than just trying to make 100,000 in a month. Trying to build it, get better at it, and then raise the capital. That's where you get benefit.